Well, as always, we love getting questions from the Equity Mates community. If you would like to submit one, head to equitymates.com/contact. Today's question comes from Drew.
Yes. Now, Bryce, you say we always love getting questions. What we love even more is getting considered, well-researched PDFs from the Equity Mates
100%
community.
makes our job very easy.
So shout out to Drew because he has asked the question, what are your thoughts on how the US election will impact the stock market? But credit to Drew, he's gone a step further. I've put together some charts attached based on prior elections. Keen to get your general reflections. So what we're going to do in this segment, we'll talk to some of the information that Drew's given us. We'll also talk to some other information we've pulled out. When we went to the JP Morgan media briefing, they also spoke about this, so we can talk to that. But if you want to see Drew's charts, we'll share the PDF in our Facebook discussion group. So head over there and you can see the charts for yourself.
Love it. Well, let's crack in. So how do stocks perform during leading up to the election? What is the impact? And I think the way that Drew split it out here and the way that we'll split it is pre-election and post-election.
Yeah, 100 days either side.
Yeah, 100 days either side. So the first thing, on average, stocks are volatile pre-election, while post-election they become a little bit steadier.
Yeah, during 8 of the past 10 US presidential elections, stock performance was better post-election in those 100 days post than 100 days pre. And on average, you can see a pretty meaningful step up post-election and a fair bit of volatility pre-election.
Yeah. There is a thing called the fear index, which is just a measure of volatility. And
it's the VIX.
It is the VIX, yeah, VIX. And no surprises that it peaks just before election day and then subsides quite substantially, on average, actually to a point lower than it does 100 days pre-election.
Yes.
But no surprises there.
So to put some numbers to it, if you index, if you re-baseline 100 days pre-election at 100, it gets up to 141 on average right before the election. Then 100 days after, it's actually lower than where we baselined it. It ends at 96. So to put that in layman's terms, in the 100 days leading up to the election, everyone gets super nervous, super anxious, and volatility rises. And by 100 days after the election, a lot of that fear has subsided.
You can actually trade the VIX. There's an ETF that lets you do it.
Yeah.
I remember trying to do it back in the day. It was a roller coaster.
I would recommend not doing it.
Yeah.
You can trade the VIX leveraged as well. And
yes,
I would certainly recommend not doing
it's like a corkscrew, I remember.
So the question is, that's the average. What is happening this election cycle? And the long and the short of it is we've seen heaps of volatility pre-election. Because if you go back 100 days, it's right around that August period where
Biden's on the edge.
We had the quote-unquote horror global bloodbath. We had Japan's wobble. We had Nvidia's wobble. The market fell. And so, we've seen a fair bit of volatility.
We have. So it's trending in the right direction, but it is, looking a little bit more bumpy.
Trending in the right direction is an interesting turn of phrase. Trending in the historically consistent direction.
Yes.
Yeah.
So then post-election, we've noted that on average the stock market becomes a little less volatile and generally performs better. But is there a difference when it comes to which party wins?
To be honest, no.
No.
It's
Whether it's Democrat, Republic, the market powers on.
Yeah. I mean, Drew's pulled out each individual election cycle, and the really noticeable one is Obama really had a tough start.
2008.
Yeah. But you can't really blame him.
No.
Yeah. And for me, I think that's probably the takeaway from this is like, as much as we think presidents change everything, and they change a lot of things, but particularly on the economy, but just generally, like the American political process is pretty calcified, and there's a lot of checks and balances in there that really slow things down. And even someone as radical as Trump, whether you agree with him or not, like he was completely outside the norm, but like there was a lot of institutional restraints on him in terms of like a Senate that didn't do much, and a House that blocked a lot of stuff, and a Supreme Court that strikes things down. Whether or not some of those institutional restraints have been loosened
Well,
that's
he
a
certainly
second.
wanted to, but
That's a second. The separate conversation. But I think that's probably why you get a lot of fear and anxiety leading up to the election. But then once the election happens, people sort of
revert to the norm.
Yeah. And look, when we went to JP Morgan, it was exactly what they said as well. They said that markets are generally choppy in the run up to a US election, and then we generally see a rise afterwards. So that's not to say that history will repeat. There is so much. I would say there are so many more important factors than who wins the election on where the market's going to go. Do we see a spike in inflation?
Yeah.
What happens with interest rates? So what happens with war in the Middle East?
Yeah.
Do we see oil prices spike because of ongoing tensions in Eastern Europe and the Middle East?
Do the dock workers go back?
Yeah, exactly. Yeah. All of these things are going to be probably more consequential for the stock market than the US president.
Yeah.
And I think my final point would just be that when you think long term, the unbelievable wealth building power of the stock market has been driven by presidents of both sides, with various various policies around the economy, and we would expect that to continue in spite of whatever's happening politically because of the power of, global entrepreneurship, of people working hard, coming up with new technologies, new ways of doing business, and, sort of growing the economic pie for everyone.
Yeah, I mean, when you zoom out on the S&P 500 last 20 years, you wouldn't even know when an election took place.
Yeah. So I think that's probably the most important thing, that it's newsworthy, it's in the moment, it's something that we're all thinking about. But when you retire, you're
not going to be like, damn, I misplayed that 2008 election.
Exactly. Yeah.
If only. Yeah, it's a good question, and one that often pops up around election times. How should we be playing it? How should we be thinking about it? How should I be positioning my portfolio? But key takeaway here is that doesn't really make that much of a difference long term.
If you did really want to trade the US election, you wouldn't trade the index.
No.
Like, you would trade, you
trade
can
the VIX.
Well, no, you can see it. There's this Trump trade when the Trump assassination attempt happened, the first one happened, the Trump trade happened where private prisons, gun manufacturers, and oil companies' share prices all rose on the thought that Trump would get into power. And then when Biden got flicked and Kamala came in, all the renewable energy stocks jumped and those Trump trade stocks fell. So, like, if you do...
You're too late to the game, though.
Well, the election hasn't happened yet.
But, like, it's as soon as that happens, boom, stocks are up. That's it. You've missed it.
Yeah, I agree. What I mean? It's not a game that I would want to play.
No.
Yeah.
Way too complicated.
You're like one step removed from just going onto Sportsbet and just punting on
the
the election.
100%.
Yeah.
Just have a bet on who wins.
To be honest, punting on the election on Sportsbet is cleaner because there's less variables.
Yeah.
You're actually just betting on who's going to win. When you're trying to do like the Kamala trade or the Trump trade, you're betting on who's going to win, but there's a whole bunch of other variables that could affect it. That's not to say you should punt on the election, but it's just to say that, like, focus on what matters for you personally to build your wealth.
Yeah.
And, that's being consistent.
More than enough, yeah.
Dollar cost averaging, having a plan and sticking to it, and then however you want to activate politically, do it
Jump
outside.
on Sportsbet.
Do it outside your investing portfolio.
Love it. Well, thank you so much for the question, Drew. Because we mentioned gambling, if you need help, you can call the National Gambling Helpline on 1-800-858-858. Now, if you want the charts that we were speaking about, join the discussion group, our Facebook discussion group. Come and join the conversation along with all of the other Equity Mates community members.
Equity Mates! I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.